First of all, I don't think you can disparage Balaji because someone who cries wolf says this repeatedly and makes a dire prediction repeatedly and is wrong. And we can't say yet that Balaji is wrong. Do I think that we're going to have $1 million Bitcoin in 90 days? I personally find that very unlikely, but you can't say yet. He stuck his neck out making a prediction that will be easily falsified if he's wrong. Second, the last time that Balaji made a dire prediction was COVID. And he was right about that one. So you can't say that this is just like a doomer who throws out crazy predictions and is always wrong. He's actually pretty selective about his predictions.
Balaji Srinivasan, a former chief technology officer at Coinbase, gained attention a week ago when he announced a $2 million wager on Bitcoin reaching the $1 million mark in 90 days. On March 17th, a venture capitalist and angel investor forecasted that the US was headed for a period of hyperinflation that would force the dollar to devalue sharply and result in significant price increases for Bitcoin. Balaji claims that the recent financial industry bailouts are the main cause of the current hyperinflation. Bitcoin is a hedge against hyperinflation, monetary debasement, bank freezes, and wealth expropriation, according to the former Coinbase CTO, who made this statement in December. He additionally anticipated that Bitcoin would eventually take on a gold-like role as a hedge against typical inflation. Balaji thinks the time is now, according to his most recent tweets and wager. He advised investors to purchase Bitcoin and remove their currencies from exchanges in one of his most recent tweets. The recent episode of the All-in podcast featured the besties Chamath Palihapitiya, David Sachs, David Friedberg, and Jason Calacanis talking about the veracity of Srinivasan's claim that Bitcoin will be worth $1 million, along with whether or not Bitcoin is a viable alternative to the fiat Ponzi. They also talked about the downfall of the banking industry. Before we begin the debate, would you kindly take a moment to like this video, subscribe to the channel, and enable post notifications for more content like this? Be sure to include your thoughts on the $200,000 wager and the $200,000 Bitcoin prediction, as well as any further comments and observations. Everything you do greatly adds to the growth of the channel and helps the YouTube algorithm. Thank you and enjoy the video.
Yeah, there was a tweet from January 30th of 2020 in which he basically predicted a pandemic based on a coronavirus and laid out a whole bunch of consequences that mostly came true. Which is why we're talking about this. This is not just some like random person. Like he actually has a pedigree and a track record. What do I think about it? I posted my own theory today, which I would call sort of Balaji light, which is, okay, look, if you think about this spike in interest rates that we've had and that Chamath thinks will actually continue quite a bit longer, there are three main effects that it indisputably has. Number one, undercuts the value of long-dated bonds. Number two, it's made lending much more expensive, particularly for big purchases like real estate. Number three, it's increased government lending costs. Okay, now play that through the financial system. What does that mean? Well, if the value of long-dated bonds has sharply decreased, well, that's led to this banking crisis with the unrealized losses. That's already happened. Number two, it's made lending more expensive, the credit crunch and CRE. We're beginning to see that. And I believe that's going to play out as the second crisis of this larger financial crisis. And then number three is the increase in government borrowing costs that will eventually play out in terms of being a government debt crisis of some kind. And I think it'll involve, a spike in borrowing costs at the federal level and involve sovereign debt issues internationally. I think it'll involve budget deficits at states and cities. So I think there's three phases to this financial crisis. We're in phase one, and I think CRE and government debt are the next two phases. And I think a lot of that lines up with what Balaji thinks. Where I disagree with him is I don't think we can know what's going to happen in 90 days. I think that the CRE crisis is highly deflationary. It's going to create distress everywhere in the economy. That is going to lead to a massive reduction in liquidity. I think that the government debt crisis, assuming the government wants to inflate and monetize the debt as a way to solve that problem, that will be highly inflationary. But when these things play out, we can't know. I think that's what makes this really hard is I think jumping all the way to the sort of finish line and saying we're going to have $1 million Bitcoin in 90 days because the US dollar is worthless, I think that's premature. I think this could play out over the next couple of years.
We have a real problem if Bitcoin is the exit ramp. Why?
for an inflationary crisis, because it's not accessible enough. It's not easily transactable for folks. I'm sorry to be negative to the Bitcoin maximalists. I'm generally in favor of this kind of independent storage system that's outside of government and state control. I think there's just this unfortunate reality. I mean, we saw with the Wells notice to Coinbase today. They just arrested that crypto guy.
Do Kwon was arrested in Montenegro, of all places.
Montenegro, great country. Kraken won't let you wire money in or out as of, I think, Monday or Tuesday. And so, it's clearly becoming kind of a less accessible system of storage. No, what's more accessible? Well, I do think that one of the reasons we're seeing the market move the way it does is because folks are shifting their risk assets around quite a bit right now to figure out where is a good place to put money.
Well, there's a really interesting article that was just published on Substack by Nick Carter, who I guess is a guest writer on Mike Solana's Substack called Pirate Wires. This is a follow-up piece to an article he wrote 6 weeks ago where he laid out an operation by the Biden administration called Operation Choke Point, which made the case that the Biden administration was quietly attempting to ban crypto. And now, a month later, there's all these things all these steps that the administration is taking to go after crypto. And he lays out a bunch in a bullet point list. So the SEC announced a lawsuit against crypto infrastructure company Paxos. Crypto exchange Kraken settled with the SEC. SEC Chair Gensler openly labeled every crypto asset other than Bitcoin a security. Senate Committee on Environment and Public Works held a hearing lambasting Bitcoin. Biden administration proposed a bill that singles out crypto miners for owners' tax treatment. New York Attorney General declared Ethereum, which is the second largest crypto asset, a security. That's a huge change, by the way.
Yep.
SEC continued its anti-consumer protection efforts by doubling down their attempt to block a spot Bitcoin ETF. OCC let crypto bank Protego's application for a national trust charter expire. And then the SEC just sent Coinbase a Wells notice. So I think it's hard to argue that there isn't a concerted effort now to crack down on crypto by a wide variety of government agencies and authorities, starting with Gensler at the SEC, who seems incredibly hostile to crypto. So now the only question is this correlated with the stress that the banking system is under, or is it just a coincidence? And that I don't know, but I think the argument Balaji would make is that at the same time, they're going to deflate the dollar. They're going to make it harder for you to find an off-ramp. And he actually brought up a historical example that I wasn't aware of. I think it's called Executive Order 6201, which is FDR, way back in the 1930s, actually had an executive order that confiscated all the private gold bullion in the country. And they seized the gold bullion, making the accusation that private citizens were hoarding too much gold. So in any event, this is the theory. I don't know whether it's true or not. It could be a coincidence.
I think that there was a rumor going around, I don't know how true it is, that FTX was days away from getting a critical approval by the SEC to actually even further legitimize their US exchange before they went out of business. So I think Gensler had to pivot very hard from, at a minimum, being very pro FTX, and there's all kinds of stories about his interrelatedness with Sam and his family, to very anti-bit or anti-crypto in general. That's clearly happened. But look, I think that this is like a lot of tin hatting, which I don't think is very productive. If you look at the total number of non-zero Bitcoin wallet addresses in the world, and let's be extremely generous and say it's 100 million, there's still 7 billion people in the world. And so I just think everybody that tries to speak about the fragility of the US and worldwide banking system is right. And that part I think is quite lucid and unemotional. But every time they try to connect it to Bitcoin, they sound like a crazy person because they're just talking their book. I still believe that it's valuable. I was the earliest proponent of Bitcoin, 2011. 2012. So I believe that there's a place for it in one's portfolio, but I just think connecting these dots misses the point. And I think the point is much, much bigger than a crypto off-ramp. The point is that we have a lot of systemic shocks that are building up in the system. We have broken a ton of the systems that caused the financial infrastructure and the world to work properly, and we are just starting to uncover how they're broken.
What do you think about the best friend's view of the current crisis, the prediction that Bitcoin will reach $1 million, and the function of the cryptocurrency sector? In the section below, please share your thoughts and views. If you enjoyed this video, please turn on post alerts and subscribe to the channel to receive updates on new content. Thank you so much for watching.